We invite our next set of speakers to make their way to the stage, please. We will now move to a three-way conversation on growth readiness, which will see presenters speaking for 15 minutes, followed by a discussion with Yvette and questions from the audience. Our presenters today are Dr. Marlene Street Forrest, Managing Director of the Jamaica Stock Exchange, Maia Wilson, Vice President, Senior Legal Counsel and Company Secretary of Scotiabank, and Sarah Cumming, Vice President and Head of Capital Markets with the Scotia Investments Jamaica Limited. Please make them welcome.
Thank you so much, Cleo. Good morning, everyone. I'm just waiting for my slides to start. But I'm really pleased to be here. It's really an honor to share with you. I am in awe of all entrepreneurs, particularly those of the female kind. So kudos to you. I know it takes, a lot of strength to do what you do and courage. So kudos to you. All right, so governance. That's what I do all day long, every day. My job title is VP, Senior Legal Counsel, and Head of Corporate Governance for Scotia Group and all its subsidiaries and all the entities. I am the company secretary for 9 companies, including Scotia Group, which is publicly listed. So you hear people talking about governance, good governance. What is this? What is this governance thing? And I really don't want you to be daunted by it. It's something we all need to embrace. It's very wide and we can't cover all of it in the 15 minutes. I'm going to focus on a couple things. And really today, it's about how you take the good governance practices and really turn that into real growth. Because that's what we're here focusing on today. So we're going to look at the role of the directors and how they can help you achieve good governance. I'll give you some tips on how to really have an effective board dynamic and the skills and the competencies you need to look for in your directors. And then we're going to look at some specific Jamaican issues, regulatory, legal requirements that we have to comply with. So governance is not something in the air that sounds good and I'll get to it someday. It's something you have to do now because there are laws and regulations that require it, right? So don't be daunted. Everything has to be scaled to your business. So let's start with that. I don't expect everybody to have the same model that I have, all right? Or Scotia has, but it's mine. I expect you to learn the best practices, do what is required by law, and then obviously roll it out based on the size of your business. All right, so what is good governance? So the UN Economic and Social Commission for Asia and Pacific is actually the best definition I've seen out there. So it has 8 main characteristics. It must be participatory, right? We know what that means. There's not one person at the top of the company that's making all the decisions. It must be consensus-oriented, right? So we're being open and transparent and sharing ideas. You must be held accountable, okay? So that means you set a target or you have a report to file it. And if you don't, somebody asks the question, why? You must be transparent. That's self-explanatory. You must be responsive. And this translates not just to, maybe between the owners and the board, but also to your customers, to your employees. Because employees now demand to know who they're working for, what's the purpose, what's the mission of this company. All these things matter now in how people are spending their lives. You must be effective and efficient, equitable and inclusive, and that's very wide, and follow the law. All right, so let's spend a little time on directors. So the role of directors is really stewardship and oversight, not operations. Directors are not running the business, management is running the business. Noses in, fingers out. So they're elected to supervise management, and in doing so, they must balance the interest of the company, the interest of the shareholders, interest of the customers, and the interest of the employees, so all these stakeholders, right? Because what we're building here, I think it was touched on earlier, is trust, right? You want investors, customers to look at your company and have trust and confidence that you're gonna provide the service you said, the quality that you promised, in the time that you said. So all of these stakeholders, again, the shareholders, the customers, employees, are all the people you need to focus on, and your board is there to provide effective challenge to keep you honest. So the main supervisory roles of the board obviously are approving your business strategy, establishing your policies and procedures, making decisions on major matters. So let's pause on policies and procedures. So that is the hard work, right? You have to build out these policies and procedures, and you just have to decide to do it and do it meaningfully and really think about what is really affecting your business day to day. Because once you've done the hard work and built out the policies and procedures, then what comes next is the flow. You follow it, right? Then you have stability. And everything is about building that trust and confidence, right? So you have to do the hard work first. And finally, we're talking about internal controls, overseeing risk and compliance. That means different things for different businesses. So if you're in manufacturing, that could really mean occupational health and safety. If you're in a service industry, that could really mean having qualified persons that continue to do education so that they are up to scratch with the latest. So it really means different things. So let's look at your board composition, skills and succession planning and term limits, lots of things. And let me try to break it down. So your boards are meant to be forward thinking. So don't hire your best friend who's going to be your yes man, unless your best friend is a good person that will challenge you, right? So let me qualify that. But you're not gonna hire your yes man. You want somebody who is going to question the decisions you're making. You want somebody who's actually going to add value, not a rubber stamp director. And trust me, Audrey sits on our Scotia Group board, she sits on our Scotia Life Insurance board, she sits on Scotia Investment board, and there is no rubber stamping on our boards. They question, they demand answers, and they ask a follow-up. And that's what keeps your business trending, keeps it healthy. So you want somebody who is going to fill a gap. There's skills that you have, but there are skills you don't. So hire somebody who's going to bring something different to the table, ask questions from a different angle. Try and anticipate where your market is, what kind of skill you might need, and earmark those kinds of people. So you need to look at the skills you need. You need to look at the term limits you want to set, and you want to make sure you have like a small pool of potential candidates you can pull from. Because directors come and go, things change, they term out, maybe they have a conflict, they have to come off, so always have a little pool of directors for your succession planning. So some potential considerations. So I won't go through all of them, but obviously experience, and they might not have experience in your particular field, but experience in business, experience in creating something, experience in innovation, skills and competencies. You want them to be independent-minded. You want them to be collaborative as well. And then culture and fit. Do they understand your business? All right? Are they going to fit within, or is it just going to be, a total clash? That's not helpful. It's not helpful to hire somebody that has a good resume that is just going to totally clash with you. So you need to think of all of those things. And of course, reputation and integrity. Very, very important. Because once that reputation is gone, it can't build back. All right, so this is an example of a skills matrix. A little technical, but just work with me. So this will change based on your needs. So you build out a little matrix of the skills that you want to see in your directors. These are just some general ones. It will be specific to your business. But you're looking for leadership, strategy, somebody that can help with risk management, HR, governance, corporate social responsibility that came up today. What's not here, but is very topical now and is very important, is ESG, environmental, social, and governance. So some aspects of it are there, but ESG on its own deserves its own headline. You need somebody with legal and compliance skills that can advise you, marketing, PR. So these are some of the things that you need to look for in your directors. Okay, so now you have your directors. Now what? It doesn't just stop there, it's continuing. You have to obviously do an onboarding and an orientation at the beginning, but then you also have to do continued education. Your markets are changing. There's a new product being developed. How will your directors ask you questions and give you effective challenge if they don't understand it? So there's always ongoing education for your directors so that they can keep giving you that value add that you need. All right? So it's an inclusive process. They will ask for some education, you have to be open to it, and you will recommend some. And then there's term limits. I'm skipping because I want to get to the more juicy stuff. So term limits, it depends on your business, but set them between 10 to 12 years. And it's good because you need to refresh the board. You can't have the same board all the time because the decisions will become stale and people will become familiar and you become very close, and you can, for some directors, stop being that really effective challenger because, boy, me and Maia friends, I don't want to be too hard on her. No. You need to continue that churn to keep that high level of independence of your directors. All right, so let's get to strategy. So management sets strategy, right? Management owns strategy. You know the business, not the directors. You know the business in and out. You know what you want to achieve. You set the strategy. So you have to do a very detailed strategy. It's next 6 months, 1 year, 2 years, 5 years. What's the plan? What's the path? Why am I here? Why did you ask me to be a director? What is the projection? And then we're going to go through it, and the directors are going to ask questions, make recommendations, and you agree on the strategy. See, once you've done that, every board meeting or whatever cycle you have, the directors should get some kind of update on what's going on with the strategy we set. How are we doing? What did we achieve? Are we on target? And that keeps you accountable. And that keeps you driving, because you can't show up to the board meeting and say, boy, I didn't get to that last month. All right? These things help to drive the business. So the board implements and monitors the implementation and effectiveness of the strategy on a strict schedule. This is a core function of the board. So don't take this one lightly. All right, so let's look at some trends in governance. So risk governance, big ticket, all right? So if you don't have solid risk policies, procedures, if you don't know your risk appetite, what are you testing against? What are you looking against? How do you know if something is falling out of whack with your business if you don't even know what the bar is? You didn't set it. So you have to set the bar. And then every month or so, you watch the trends and you know, okay, this isn't going well. What's the corrective action? But if you don't set the bar, then you don't know what you're looking for, right? So conduct and corporate culture. Where have I gone? So this is what some of the things that regulators are interested in. So like, for example, at Scotia, we have a code of conduct. It's very detailed. It speaks to our behaviors and our beliefs and integrity and trust. And every year, we all have to attest to it. We have to read it and attest to it every year. So, some form of that in your own businesses so that you and all your employees are aligned. You're aligned with the basic principles with which you're going to operate. Remuneration frameworks, that's a big deal. How are people compensated? This can't be a secret. There has to be transparency so people know what they can aim for. Okay, well, I'm going for that promotion. I know that's a next level up, and this is a salary bracket. Like, it has to be transparent. It gives people something to strive for. Explicit expectations with respect to control functions, risk, compliance, finance. So what are these? So these are not things you can say, I have a risk plan. What is it? Be very specific. AML and ATF requirements. Does that affect your business? What are your legal requirements? Be specific. Have them down. How are you tracking? What are your finance expectations? What's your target? What's your capital base? Be specific. Lay it out. And compliance and risk. So we talked about independent representation on the boards. We talked about board refreshment, diversity. And then there's ESG. So in my other hat, I'm the chair of Scotia's environmental committee, which is really about staff engagement in environmental actions. So that's my personal passion and drive. But the company, your entity, what are you doing? Do you have a recycling program within your company? Is your business emit carbon into the air. What are you doing to reduce that? Do you have an updated AC system that uses less energy? What are you doing? These things matter. And you're going to have more and more questions about ESG as this becomes more formal in Jamaican society, more formal within our regulators. So we need to get ahead of it because it's coming. So right now it's not mandated, but it's coming to come. And then you have your social and governance, your corporate social responsibility. What do you do for your communities? And then governance, what we're talking about today. Cybersecurity, it's a big one. If you're collecting customer data, how are you storing it? So you have the Data Protection Act, which there have been many, 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 many trainings on. I hope everybody has a basic understanding of the act. But when you do collect this data and there's a way you collect it, how are you protecting it? That's very important. And you need to ask yourself, how you're interacting with your customers, do I need all this information? Is it required? My favorite one is supermarket reward cards. Why don't need my TRN? A supermarket reward card. They don't need that. So all of these things that have to change. All of these forms and these things you're collecting have to change. I went to a new salon the other day to try it out, and they wanted my date of birth and TRN. And I said, no, thank you, ma'am. You need my name and my number, Oh, it's just a standard form we always ask. You don't need it. What you're going to do with it, how are you going to protect my information? So check your forms, check what you're asking customers. Is it required? And if you need it, how are you securing it? All right, business continuity. So we've all been through COVID. This is real. What are your plans in case of a disaster, a pandemic? You need to have set plans. You need to have procedures in place. Your team needs to know what to do if something happens. And you can't just write these policies and put them down in a book. You have to bring them out. You have to refresh them. You have to do a little run through so that it's real. And the same goes for crisis management. All right, winding down in center time. Okay. So in Jamaica, these are some key things that I want everybody to pay attention to. Because as I said, it's not, something in the air. These things are real. So does everybody know that the Companies Act of Jamaica was updated last year and they increased all the fees? So, for example, you used to file your annual return. If you were late, $10,000 maximum. Now the fines are between $1 million and $5 million. Yes, ma'am, since 2023. Okay, so what does that mean? You need to have a process in place to know that, okay, my filings are due in January. So from October, there's a trigger. In November board meeting, the directors need to get a report to say, filings done, filings complete. Right? Put it in, build it in. You cannot be late. You cannot afford these fines. I can't afford these fines. Right? It's about accountability, so build it into your process. We don't take these things lightly anymore. If you run a business that has manufacturing, if you use chemicals, or even if you're transporting yourself, occupation and health and safety, that act is real. There are implications. You have to protect your team. If they have to stand up on a box to reach a shelf, no, buy the step ladder. Because if your staff member gets hurt, it's not just a pay the medical fee. You might have to support them for the rest of their life. Okay? So look at these things within your business. Take it seriously. We have a sexual harassment legislation now. Right? We live in a very warm, friendly cultural. That's our culture. We hug and we engage. But some people are not comfortable. And you have to let them know that that's fine within your environment. You are in a safe space, and you don't have to engage in any informal and physical activity that you're not comfortable with. And the reverse is true. The other staff who may be that way inclined needs to understand that, hey, don't take it for granted. You have to be invited and you need consent. Yeah, that's where we are. And these things are real implications. And if somebody is being harassed, they need to know where to go, who to file a complaint with. They need to know that when they speak to their supervisor, they're not going to be chastised. And they need to know if it is a supervisor that is the cause of complaint, that they can go to another person. So where is that procedure? Where is that guidance? Your staff need to have that protection. This is a requirement. This is not a nice to do, it's a must do. You have whistleblowing as well. Again, real law in Jamaica. So your team need to have an avenue, an independent avenue that they can go and raise concerns. And then there are specific industry-related ones. So that really depends on what your business you're in. But the message I'm sending is, all of these things will come out of governance. You need procedures and processes for all of these things. And once you have that, things will flow and your staff will know how to operate. You will know what reporting is required. You will know what you're accountable for. And you don't have to deal with it ad hoc as it comes up. So do the hard work and get the policies and guidance in place. All right, so let's wrap it up. So what does all of this lead to? So good governance leads to meaningful oversight, right? So you're really watching over your business and your directors are there to support you and provide effective challenge. Good governance leads to early detection of issues. If you can see the trend going down and you had a different earmark, you can know quickly, okay, I need to adjust. Effective challenge keeps management accountable. And it prevents regulatory breaches and penalties, which are now more than ever real in Jamaica. And then it leads to, trust and confidence, which leads to stability. And all these roads lead to growth, which is why we're here. So don't be daunted. There are tools out there. Show of hands, who knows that the POSOJ has a corporate governance handkit that actually has policies and procedures, precedent policies and procedures that you can pull from, that exists today. One hand. It's on the POSOJ's website, free. It has a policy for occupational health. It has a policy for sexual harassment. You take the models down and you build them out based on your business line. Support is out there, tools are out there, guidance is out there. But don't be left unaware and unprepared. That would be the worst thing for you. So that's my piece. I'll be here for questions. Thank you very much.
Thank you, Maia. Dr. Street Forrest, would you please make your way to the lectern?
I'd like to thank Scotia for inviting me to speak today at this session, Going for Growth, Planning for the Future. It is very important in business that we talk about growth, because obviously when you start a business, many persons start a business, it is small. And then you want to improve, you want to grow. And at the stock exchange, what we have is access to capital. So the stock exchange provides one with access to capital. We heard this morning that we have 45 companies that are listed on the junior market. In total, we have 101 companies that are listed. And the avenue for access to capital is the same whether you are a junior market company or you are a main market company. And Maia has just spoken to one of the major areas that you have to prepare for in order to list on the Jamaica Stock Exchange. And that is the question of governance. If your company is not properly governed, or when one checks it, you do not see that there's a possibility that your company can continue to be properly governed after you are listed on the exchange, you will not be admitted to the exchange for listing. So I want to share with you how companies can achieve growth through the lens of going public and the preparations that will be necessary. as you would have heard from previous presentations, there is the option of the opportunity to go public to achieve growth. And let us just put that in very normal terms. What is it that we mean by going public? It means that you have the option of offering your shares to all investors in Jamaica or elsewhere, because for the stock exchange, it does not preclude persons from investing in your company, whether you are here in Jamaica or you're elsewhere. And what it means is that those persons will have a share or part ownership in the company. And in order to access that capital, we are going to have to look at 3 legs to access it. One is the full consideration of why are we going public and why should we contemplate listing on an exchange? Because going public does not necessarily mean that you are going to go the extra mile of listing on an exchange. But generally, companies that raise capital list on an exchange. That's the general theme. Then the second leg is, what is the preparation that is needed for listing on the exchange? And what is the process of listing on an exchange? As private companies, the barrier to growth is lack of capital. Everybody knows that, and Audrey has spoken about the fact that nowadays it is easier to access capital, but that is still a constraint where persons may have debt, and it prevents them from growing. The topic is growth. It constrains them from growing. It constrains them from being competitive, from expanding. Nowadays, we talk about technology. It constrains them from responding to changes in technology, including retooling and including the reduction of debt service. And we all know about those. So by going public, the company has the benefit of new shareholders to inject what we call patient capital. You are not called upon after you inject that capital as shareholder to pay it back. What the investor wants to see is a return on their investment in the form usually of dividend. And also what they look at is how is the company doing, and how is the price of my share appreciating, meaning getting higher. It can get lower, but based on good governance and performance on the market, it tends to grow. So these are some of the ways that investors will look towards receiving a return on their investment. Now, we speak about the governance arrangement, which must be in place in order for the company to come to market. What is less spoken about, though, is instances where funds are raised to be used for research and development and allowing companies to achieve long-term strategic goal and sustainability. Because you have that capital, and not only do you have that capital, when you come to market, you have a body of shareholders. Those persons would have provided you with the capital. And if the company does well, if the company is properly governed, if the company communicates well with their shareholders, in time, if you want to expand again, you have that base. And you can always go back to market for not permanent capital, but you can go back for temporary capital. You can go back in the form of a bond or loan. And one would see that many companies have done that through what is called an APO. And you have heard about it, and people have put themselves into a position to benefit from the companies going, and that's additional public offering, going to market. One of the things that we have seen, though, is that many companies, especially small, medium-sized, women-led companies, do not come to the market to raise capital. And it is because of, I think, an emotional readiness. So one of the things that I would ask Scotia to do is to look at how we prepare women in terms of emotionally ready. Because many of the times your business is ready, but you are not ready. And when we look on the sustainable development goals, one of the areas is to improve the percentage of women-led businesses and to improve that percentage also of women who are directors or women who are top CEOs or women who are chairmen. And I might be diverting from the script a little, but this is all about growth and growth of women. And we find that we say, why is it that we do not have many more women who are directors or the chairman of the company, etc.? But if we should look at it reasonably, many men take that risk. And when they take that risk, they become the chairman of the company. And usually associated with that, the persons they are associated with are male, mainly, and then they put those male on the board as directors. So what I'm saying at this session is women should try to move into a space where risk is there, but risk is there to be taken. Analyze the business and see that the business has that growth potential and go for it so that you can improve that number. So there is something for us to do as women. Yes, instead of saying men are not putting us on their board because they take that risk, try instead to look at your business, understand that the risk is there for men or for women. It's just for human, right? And go for taking the risk of access to capital, whether it is capital in the form of equity or in the form of debt. But as you know today, I'm talking about in the form of equity. So then, what are our responsibilities? With listing comes responsibilities, whether it is a private company or it is a public company. Immediately, a company becomes incorporated at the Companies Office of Jamaica. There is that document that you have to fill out and that document that you get, the Articles of Incorporation. And I don't know how many of us really look on that the Articles of Incorporation. But if you look at it closely, it provides the immediate blueprint for governance. It speaks to you about your board of directors. It speaks to you about annual general meetings. It speaks to you about ordinary meetings. It speaks to you about your annual report. It speaks to you about your financial statement, your audited financial statement. So I'd like to encourage you to just take back up those Articles of Incorporation and look at them. It provides you with that first stage of governance. Now, if you follow that, you should be on a path to being able to raise funds on the market and to list on the exchange. Now, if you are going to be raising funds on the market, you have to prepare for this. So usually we talk about the initial public offering or the IPO. Most people just say the IPO. And what you have to do is prepare this document called a prospectus. Because it's prospecting, it's throwing it out there to say that I have a need for capital and I will invite you as a shareholder in my business. Now, the prospectus includes, and Maia talks about it, you have to talk about your board of directors. So going back to the articles talk about that board of directors. So from now, you prepare to have that board of directors, have some meetings. Call your board of, small companies tend to focus more on the operations. I have to get this done. But it is important that we talk about the governance and call that board, have that board of directors, have the audited financials. If you are in a business for more than 5 years and you want to come to market to list, again, I go back to the Articles of Incorporation, and the Companies Act. The Companies Act speak to it. You have to have 5 years audited financial statement. I'm going to pause to say that whether in this room you feel that you are going to be going to the market for equity financing, or your path might not take you there because not all companies will end up listing on an exchange or having equity financing. Act as if you are going to need equity capital. Everybody, every company should act as if somewhere down the road, I am going to need it. So you start the journey by having in place the good corporate governance. Let me also include in this deep dive that you have to have is that the Jamaica Corporate Governance Code, and Maia speaks about it, sets out for you what you need to do in easy form, what you need to do to begin that journey of good corporate governance in order to come to the market to raise funds. Now, the stock exchange itself have other requirements, but most of them, if you examine them closely, they relate to the same thing of corporate governance. So it is the ability, again, to submit your financials at the end of a certain period. For the stock exchange, quarterly is 45 days after the end of the month or that quarter, and 60 days after the end of the year if you elect for 60 days. Now, as a company, we'll be offering the shares to the public. The steps will include, as I said, the offering document, and the story must be compelling. You love your company. So nobody can tell that story better than you as to why it is you are asking for the funds and why is it that people must invest in the company. You have to talk about the price of the share that you want to offer in, as it relates to Jamaica Stock Exchange. The minimum that you can offer is 20%. 20%. That, one of the fear in people's mind is, I'm going to offer or I'm going to give away my company. But the stock exchange says 20%. That's the minimum that you can offer. And obviously, I will stand in front of you today and say to you, I don't believe you should offer near to that 50%. It's a truth. So stay within the range of the 20, 30%, or even 40%, so that you continue to have control, and I think what we also call effective control over your company. So don't fear coming to market because you feel that you might lose your business. Most of the companies that have come to market would attest to the fact that that is not the case if they stay within that threshold. The prospectus is a legal document. So if you are coming to market, you are going to have to get your lawyer who will look over that document for you. At this point, you are a private company. But if you want to raise public funds, then you have to convert the company, the status of the company from private to public. It's not a difficult process. The lawyer will take you through that. And you need the help of a stockbroker. The prospectus must be approved by and remember what we said was a prospectus, that document that you're inviting people to come into your company, shareholders. The prospectus must be approved by the Companies Office of Jamaica. And here is where the Financial Services Commission comes in. Because you are raising funds from the public, the Financial Services Commission comes in. And the Financial Services Commission must review that prospectus as well and give you what is called a no objection. As most of these prospectus will be, the companies will be listed on the market, the stock exchange itself also review the document to show that there is no objection. So here we are. You have gone to market, you have issued that prospectus, it is oversubscribed. And I smile at that because every junior market company that has raised funds on the market since its inception has been oversubscribed. Because Audrey spoke about it this morning to say there was skepticism as to whether investors, Jamaicans, would invest in businesses, small businesses. The fact is that they will invest. Whilst the story is compelling, whilst the governance is there, whilst you can show that afterwards there's a market for the security, they will invest. And so after that, when the offer is subscribed, there are some things that the company must do in order to now become listed on the exchange. There must be an application for listing. Yes, you are applying to say, I am going to be a member of the exchange, a company that is listed. And then there's a listing agreement. And that listing agreement is simply for us to put all the rules in that agreement and say, you agree to abide by those terms and conditions. And if you don't, you will be, when you come on, you are listed. If you don't, you'll be suspended or you'll be delisted. You have to have a registrar of members because you have shareholders, and even now where the Companies Office and the Companies Act has been amended to ensure that there is proper information on shareholders, it's very important that you have what is called a registrar. And that registrar will assist you in updating that register. On the stock exchange, your register is automatically updated based on the situation, the shares that are traded on the secondary market. If you are in business over 5 years, and that's why I said keep it so that you start to do what you have to do properly, you have to have 5 years audited financials, a copy of the document of incorporation, a letter from your legal counsel saying that the securities have been duly and properly authorized, an approval from the company to list its shares. You have a board of directors. They are going to certify that. They say, yes, go ahead and list the shares. You have to have an audit committee. And an audit committee with the majority of the members being independent. Maia went over that to say, it can't be all about you. You have to have independent voices on your board. So the majority of those members must be independent. And also, if you are a junior market company, we want to know how you spend the money. So the government would not have given a remission on income tax, and then at the end of the day, small and medium-sized companies abuse it, right? So for the junior market, the government gives 10 years of remission. 5 years when that junior market company pays no tax, no corporate tax. And then the other 5 years when they pay only 50%. So your company, you can plow back that money into the business. Then you, as I indicated to you, that you have this application, and it goes to the listing committee, and then you are, if it is approved, you are on your journey to be listed on the Jamaica Stock Exchange. The key to growth and access to capital really is good planning and proper governance. You start now. You know, it is a part of the business that you just have to ensure that it is done. And as I said before, for female entrepreneurs, I want to encourage you. It might be scary, you might think it is daunting, but Scotia is here to assist that process, and they know how to do it. And the stock exchange is here, our doors are open. You can call on us and we'll assist. Many tools, as Maia said, are online, so you start that governance process early. And just continue to see whether you need that patient capital, which most companies that have listed the 45 on the junior market, they have grown exponentially. They have grown in terms of their governance. We have had hardly the issues that we have had with governance on the main market, pretty similar to the junior market. So the junior market, the SMEs have done well. You can do it too. Most of these younger entrepreneurs, what I've seen, they are male that have come on to list. It doesn't have to be like that. So I am encouraging you that in order for your company to grow, think about equity capital.
Thank you. We now welcome Sarah Cumming.
Good morning, ladies and gentlemen. My name is Sarah Cumming. I am the Director for Corporate Solutions and Investment Banking at Scotia, and it is my pleasure to speak with you on the topic of going public as a growth strategy. My presentation today will seek to offer insights on the reasons for going public, share a little bit with you about the current market conditions, and generally how to evaluate your readiness to list. So we can skip to the third slide. You can go ahead. Okay, so as I mentioned, we wanted to talk about the reasons for why you would want to go public, why would you want to list your company. And I want to emphasize that growth is a key underlying motivation for going public. When we meet with a prospective client, we aim to understand their why. What do they hope to achieve with a listing? Are the reasons financial or strategic or a combination of both? When we think about the financial objectives, we think about unlocking value for shareholders. All of you in this room are entrepreneurs, business owners. You spend most of your time in your business. How many of you know the value of your business? Okay, so not many. Sometimes we get caught up in working in our business and we forget that our business can be our most valuable asset. The process of listing or going public allows you to really unlock the value of your business, to put a price to your share and value your enterprise, right? Your business is not just about earning dividends through profits, but how can you actually put a value to your business? Listing allows you to raise cash for future expansion and acquisition. We also see where proceeds are being raised to reduce debt. And as Marlene mentioned, you can leverage tax benefits. It can also be a strategy that you pursue to reward and incentivize team members. Marlene mentioned that, raising 20% of the company, there is some hesitation, but see it as an opportunity to also give back to your team members, the persons who are employed to you, who are aligned with your vision and your goals. When we think about the strategic reasons, listing can be a great opportunity to raise the profile of your company. Look at how many companies that are listed on the market that are now household names that you are very familiar with, whereas as a private entity, you probably hadn't heard of them. It's an opportunity for you to introduce stronger corporate governance and controls, as highlighted previously. It can also be an opportunity to allow for founders or shareholders a partial exit, right? So especially in family-owned enterprises, there could be aging family members who are founding members or shareholders. Maybe it is their time to realize the value that they have contributed to the business, and it will allow for an exit for them. Going public also ensures the continuity of your business. It institutionalizes it, taking it from a family-owned enterprise to something that is widely held and institutionalized. Of course, all well-made plans have to consider timing. Next slide. Timing of the market is critical for ensuring your success. As an advisor to our clients, we pay keen attention to the macroeconomic conditions and the market conditions when supporting a public offer. Currently, there are positive trends in our macroeconomic environment that make the prospect of listing favorable. These include an upgraded credit rating for Jamaica from single B+ to double B- with a stable economic outlook. Our net international reserves are at an all-time high, and inflation is trending towards a targeted band of 4% to 6%. We also have a very low debt to GDP, our lowest in years, and we are on target for meeting 72% by end of financial year next year. However, in terms of the market conditions, the higher interest rate environment has meant that there are lower risk investment alternatives for investments in fixed income securities. We are also observing lower levels of liquidity in the equities market. Notwithstanding, the junior equities market is showing signs of a rebound. In our space, we are seeing more interest when we speak to other brokers in the market. We are hearing about a potential of new offers coming to market. We also view the recent increase in the market capitalization for the junior market by 50%, so it's moving from 500 million to 750 million, as a positive move, given it expands the potential of companies that would be eligible to list. Next slide. So this is a very good graph. The graph here shows us the market performance of both the junior and main markets. The junior market index is denoted in red, and the main market index is in gray. We can infer from this graph that the junior market index has recovered to pre-pandemic levels, whereas the main market has not quite recovered. Next slide. So let's have a look at the performance of IPOs, right? Marlene would have mentioned that all of the junior market listings that have come to market have been oversubscribed. In the graph here, I'm showing you the 9 junior market listings since 2021. So we're looking at kind of a post-COVID list of offers, right? Companies that have come to market. So these are 9 companies, and what we would have noticed here is that 5 out of the 9 issuers have seen an increase in their values post-IPO. So we can see here in the dark color is where they would have been their IPO price. We would have seen that in all instances, these offers their share price would have increased. And now looking even post, we're seeing where 5 out of the 9 are still benefiting from share prices in excess of where they came to market, thus implying that value has been created for all shareholders. In reviewing the reasons for these offers, we note that 5 out of the 10 issuers raised equity capital to reduce debt. Why do I highlight this? I highlight it in the context of assessing your readiness to list. As we've talked about the process, the things that you need to get in place, I want you to bear in mind that the companies that come to market to list are in fact credit worthy, meaning they have access to also bank debt, right? Which is usually the first form of capital you may seek, so your relationship with Scotia. So raising capital through the equities market has allowed these companies to reduce debt, optimize their balance sheet, and pursue growth. In all instances, these companies would have also raised equity capital to grow their business. So you can have, that's why I've shared the reasons. It can be more than one reason that you choose to list. And as Marlene highlighted, it is very important that you communicate what the use of the proceeds are to the market. I would also highlight that in all of these instances as well, listing would have raised the profiles of these companies. So what is a junior market listing? Marlene would have mentioned given us a lot of detail before, but it really allows small to medium companies to raise money from the public by offering shares and listing on the market, on the exchange. As I mentioned, very positive is that the share capital has increased for junior market listings to 750 million. It really means that larger SMEs can now list on the junior market and avail of its benefits. On average, what we've seen is companies would have raised around 325 million, right? Is kind of what the average raise is. So notwithstanding before it was 500, that's kind of been the average raise that we've seen. I think what's also important to highlight is whilst the minimum to list is 20%, it must be held by at least 100 shareholders. So this is very important in terms of recognizing that you can't go and select 5 shareholders to fund your offer. It needs to be widely held and you need to maintain 100 shareholders. It's also important that the company must remain listed for 15 years to retain the benefits. So this is key because we are talking about all the things you have to do leading up to an event, but it doesn't stop at that event. It is an ongoing, it is a journey. And so to think about your business, right, and your vision and your goals, you need to think about it within the context of it surviving and thriving for at least 15 years, right? So as Marlene mentioned, you do need a broker to obtain the services of a broker in order to arrange and sell the offer for you. And the junior market companies must also retain the services of a mentor. So this mentor guides the company on good corporate governance. But as Maia had mentioned, they do not get involved in business matters. Next slide. Okay, next one. Next one. Sorry. So we talked about once you've listed, you have to remain listed for 15 years. But so often companies, when they engage with us, say, boy, Sarah, how long is this going to take? A lot of it does depend on your readiness. But typically, when you engage the services of a broker, we sit down with you and define a transaction timeline. And depending on your readiness, this process can take, in our estimation, between 5 to 8 months. Right? So Marlene would have mentioned that you need to grow, build, develop the habits of running your business that sees you needing to raise equity, right? So this kind of highlights to you that it is also not a fast approach to raising capital if you need capital quickly. It is a journey and it does take time. It involves the engagement of a number of professionals, right? Legal professionals, audit firms, marketing and PR. So it is a collaborative and substantial endeavor. Next. So how do you get ready? How do you evaluate your readiness, your financial readiness? So Marlene would have mentioned, I have 3 years here, but I stand corrected that you'll need 5 years of audited financial statements. You will need to provide a business profile, right? Who are the shareholders of your business? What is the percentage ownership? What services do you provide? Who are your customers? Are you a market leader? What market share do you have? What is the outlook of not only your business, but the industry in which you operate in? Very important for you to know the percentage amount that you want to raise, right? And what is your reason for listing? We need to understand the use of proceeds. You need to be able to talk about your financial highlights, discuss the trends in your revenue, discuss trends in operating expenses, your cost of sales, and your profit. It's important that investors get a feel of your cash flow from operations, understand what your asset base is, your liabilities, and your equity. Do you plan on having a dividend policy? Marlene would have mentioned the reason investors are coming to participate in your offer is because they're expecting a return. How do you plan on giving them that return? Have you thought about a dividend policy? Very key for you to know what are your investment highlights. Can you think of 4 reasons why someone should buy your stock? Is it strong management? Are you the most technologically advanced? Do you have a strong track record of growth? Do you have a positive industry outlook? You also have to highlight the key risks in your business. What are these risks? Is it competition? Do you face FX risks? Is it technology? Once you've identified the risks in your business, you have to articulate to your investors how you plan to mitigate them, how you plan to deal with these risks. All of this information forms part of the diligence that we, as your broker, will review in terms of the process to list in getting you ready. But these are just a few of the things for you to take away and think about in your path to listing. So why Scotia Investments? Can we do the next slide? The decision to pursue a public offer is a substantial endeavor, I think, as highlighted throughout all the discussions today. It requires careful planning and a commitment to the process. You cannot achieve the goal without the right financial partner. Scotia Investments is your financial partner. As demonstrated today, we are committed to supporting your growth if the best path is through a public offer or other means. When you engage with us, right? So when you engage with us as a broker, our fiduciary is to you. We strive to deliver financial solutions that align with your strategic direction. Our goal, the goal of our team, is to operate as an extension to your business, right? We are looking to solve your problems and align with your strategic objectives. Our resources and expertise and commitment to service excellence is what gives us the edge. We, my team, are here to have further discussions with you today. We're open to having the conversation, as I mentioned, about both the investment side as well as the capital market side. And we thank you for this opportunity to share with you today, and we look forward to engaging with you.